It's that time again when billionaire investors and hedge fund managers tell us mere mortals what they bought in the most recent quarter. Here are the top 3 things to know with Reuters hedge fund correspondent Katya Wachtel. Good to see you, Katya. Now, let's start with banking because we had some very interesting news with JP Morgan. It turns out that was a stock that was in focus in these 13F filings.
Yes, there were a lot of hedge fund managers that decided JP Morgan was a great buy in the second quarter. The stock lost 22% after a soured credit derivative bet made headlines. And some hedge fund managers thought, well, that's a great opportunity to buy the stock. People like John Paulson bought JP Morgan, Jim Chanos, who's well known for short selling, he bought the stock as well. Jamie Dimon of York, he also bought the stock. The name's very eerily similar to Jamie Dimon, the CEO of JP Morgan. They thought it was a great value stock and they decided, okay, obviously the losses, which could be into the billions, may not affect the bank long term, and it's a great value stock right now. But other hedge fund managers thought otherwise. Lee Ainsley of Maverick Capital exited his position. Louis Bacon, who runs More Capital Management, they left as well. So some hedge fund managers thought, great, we love JP Morgan, it's cheap right now, and others thought, no, we don't want the risk.
Another interesting area was healthcare. Smart money really liked healthcare in the quarter, and I'm trying to figure out what that's about and if it continues.
Healthcare was, again, a focus of hedge fund managers. It may be to do with the fact that the Supreme Court upheld Obamacare and therefore there's going to be more profits, or people think there'll be more profits and revenue for health insurers. So hedge fund managers like Dan Loeb, who runs Third Point, and David Einhorn of Greenlight, they bought up a lot of healthcare insurer stocks. And John Paulson upped his stake in HCA Holdings massively last quarter as well. So these hedge fund managers obviously are bullish on healthcare insurers, think that there's going to be more money in them in the coming months or maybe even years.
So, you know, all summer we've been talking about a certain social media site. You can guess which one it is.
Facebook.
Yes, how'd you guess? So I'm interested to know if any of these hedge fund managers got in on that stock.
We were interested as well, and basically when those filings started coming through, we were poring over them, looking to see which hedge fund managers, which veteran investors were picking up Facebook stock, and we didn't see that many. That's not to say they didn't buy it and sell it before June 30, which was the deadline to submit your holdings at the end of last quarter. But we saw Chase Coleman's Tiger Global. They bought stock, but they were a pre-IPO investor, so it might have reflected that. SAC Capital, run by Steve Cohen, they had Facebook stock at the end of the second quarter. And George Soros, who's very closely watched, he had Facebook stock as well. But apart from those 3, we didn't see many brand name managers investing in the social network.
And of course, we'll see next quarter if they hold on to it, depending on what that stock price does.
The stock has fallen a lot, and maybe this will be the time that hedge fund managers decide to get in on it because it's so cheap.
All right, Katya, thanks. Good to talk to you. I'm Rhonda Schaffler. This is Reuters.